Hello, this is Argel Silva, the Flash Lender, and this short video is part of my Home Buyers Education series. And today I'll be reviewing how do down payment assistance programs work. Let's start by reviewing what a down payment assistance program is. A down payment assistance program is financial assistance to a home buyer to pay for buying a home. It may be in the form of a grant, which may not have to be paid back, or it may be in the form of a silent second. This is a loan that is secured against the home that you're buying, and it must be paid back sooner or later. It can have payments that you pay every month in addition to your regular house payment. It's a small second payment that you got to add to your payment, or it may be forgivable over time if you make your payments on time. Where do the funds come from down payment assistance programs? Many programs get their funding from HUD. Many banks also offer their own silent seconds, but they are tied to their own financing. So you must close the first loan with them, and then they'll give you a second loan to cover the down payment and some of the closing costs. Individual states also may have their own housing programs, which may include grants or silent seconds. And there are other assistance programs that come from interested parties like nonprofits, maybe a realtor, a lender, or an employer, and even the seller. Most of these, as a matter of fact, sellers are the most common forms of assistance to a buyer to purchase a home. So keep this in mind. Ask your realtor, ask your lender, so that you have all this lined up as you go through the process. How much assistance can you receive? Their different programs have different guidelines, but most of them offer from 3 to 5% in assistance, and they also may have fees that have to be paid by the buyer, although some can be taken from the proceeds of the actual program. So let's say they give you a 5% down payment assistance programs, but they're going to charge you $795 and $850 for the program for whoever is managing the program. So they'll be taken out of that, so it would be a lesser credit when you close the loan. There may be a minimum credit score requirement or maximum income requirements. So different assistance programs have different guidelines you may not qualify for. Keep a close eye on those guidelines as you go through and discuss those closely with your loan officer as you move through the process. Other requirements that are required are certain areas that you may buy or that you may not buy. So again, keep that in mind. So how does everything come together? So borrowers must qualify for a home loan. This will cover the majority of the purchase. It could be a loan program, it must be a loan program that accepts gifts, grants, or second loans as a source of funds for the down payment. Although many lenders, like I said, they already kind of tethered their first loan with a down payment assistance program. Other programs that allow, some programs that allow this is the FHA, the Home Ready program, Home Possible, there's conventional loans, VA loans, USDA loans. Although the last two do not require a down payment, you can still use the down payment assistance program to pay for your closing costs. So depending on your loan program, you may qualify for your first loan, which will cover 95 to 96.5%, or in the VA or USDA loans, that's 100% of your loan. So whatever program you qualify for will cover either part of your down payment and or also some of the closing costs associated with the home loan. The seller, realtor, lender, or other interested party can also help you with the acquisition costs, so make sure you ask if any of that is available for your purchase. This means that you may be able to come into a home with zero down payment. Now, keep in mind, if you're saving money, you have it available in your bank, and you have reserves for 2 months, 3 months of payments, 4 months, 6 months, the lender will be able to qualify you much easier and faster. So one example is, for example, a home you're buying $425,000, and if it's an FHA loan, require 3.5% down. That would be $14,875, and an average of 3.5% for closing costs. That's another $14,875. that means you need almost $29,000, $30,000 to purchase a home. But if you have a down payment assistance program, 3.5%, that covers the first 3.5% for $14,875. If a seller gives you 2% contribution, that's another $8,500 that you won't have to pay. That adds to $23,375. That means that difference that was not covered by the seller contribution, the down payment assistance programs, a rebate from your lender or from your realtor, then you have to cover for buying a $425,000 house, $6,375. Not too bad, right? So get rid of your doubts. Find out where you stand. You can schedule an appointment with me on my online calendar at kenlandy.com, and you can also visit my website at theflashlender.com and get a lot more information. And that is the end of this short educational video. Thank you for watching. My name is Argel Silva, the Flash Lender. Have a great day.